Hey, Johnny Roberts, welcome back to another great episode of your podcast.
How you doing, Mike? Good to be here. Welcome.
Well, thanks. It's always good to be here, and I'm super excited because we get to uh, take take off, keep going from where we left off last time, and our listeners will remember we were talking about life insurance, the two different types of life insurance, and how you should look at life insurance to be part of a properly structured and designed retirement plan. And we were talking about the tax-free distribution aspects last time. This time, what I want to talk about and let you really dive deep into, Johnny, are the benefits from life insurance when you structure it properly that can help pay for some of the long-term care needs that people will have. And how does that differentiate from maybe going out and buying just a policy for long-term care? I mean, it's a really confusing area. So I'm going to be quiet. I'm going to let you kind of unpack all of that.
Yeah, this is so cool because this isn't like your mom and dad's or grandparents' life insurance anymore. Things have changed so much because industry is so competitive. What's unique is I actually used to work for this insurance company that developed the first policy like this.
Hmm.
So they created this type of policy. It's been years now, but their tagline was life insurance you don't have to die to use.
Oh,
And
I
so
like it. Yeah.
that was what was put out there. And at first, it's like, what does that mean? Well, these new policies now have these called accelerated death benefit riders. Yeah, if
Okay.
you're here for the word, you're talking to an insurance person. This one has ABRs. That's all that means. They're accelerated death benefit. What does that mean? Just like it says, right? I can accelerate my death benefit. I can use this while I'm alive for certain things if I need to. So, what are those certain things? Well, let's talk about the most simple one. First is terminal illness. Generally, most of these companies come in, doctor says, we'll use $500,000 as a number. I got a $500,000 policy. Doctor comes and says, man, Mike, you've been dealing with this illness. It looks like we're not going to be able to help you, blah, blah, blah. You've got less than 2 years to live, a year to live, whatever. Each company is a little different, whether it's 1 or 2 years. Bottom line is you can now do a claim with the insurance company and say, hey, I've got a terminal illness. I'd like to accelerate my death benefit. I don't want to wait till I die to get everything handled. I'll go ahead and get it now. My wife, we're alive. We'll get everything handled. I'll help them figure out what we're going to do with all this money, blah, blah, blah. So you can accelerate most of your death benefit with a terminal
Mhm.
illness because you're going
Wow.
to be gone in a year or two.
Yeah.
What's the next one? Then they have one called a critical illness. This is
Okay.
more an event thing, right? I got a heart attack. I had a stroke. Maybe I get cancer, things along those lines. I'm going to recover from these probably, but they happen to me. It's a critical illness at some stage in my life. Once again, maybe I need some financial help. Maybe I have cancer and I want to go. Like my mom had cancer. She ended up passing away years ago, but we were trying everything to get her to the Anderson Cancer Center in Texas, right? Of course, health
Mhm.
insurance don't cover that.
Right.
These policies we were around then, guess what we could have done? Done a claim, got
Yeah.
some of that death benefit out while she's alive. Because what are we doing? We're fine to keep her alive, man. You know what I
Right.
mean? We'll do whatever we can. So take that money out and maybe help fund to go down there to handle that type of situation. So a critical illness allows you to accelerate some of your death benefit as well. And there's with each company, it's different, the amount and this and that. But the bottom line is you have access to that death benefit while you're alive if you need it for those
Mm.
situations. The third one, which is extremely important, especially in today's environment, because this industry is just exploding and most of us are going to use it at some point, is a chronic illness benefit. What is that? I have almost a long-term ongoing illness that I need assisted living help with. Now, those
Okay.
are called activities of daily living. So if you have an illness where doctor says, hey, Mike, you got this illness and you and your wife are in the doctor's office. No, you can't use the bathroom by yourself,
Yeah.
walk by yourself, or the six activities of daily living are bathing, eating, going to the bathroom, thinking for yourself, walking around, and taking medications generally.
So,
So,
case in point, somebody has, let's say they have pretty severe stroke and they're going to be recovering and maybe they have a permanent disability from that stroke. Okay. So they don't hit all the ADLs. That would be an instant. It's chronic. It's not a critical illness. It's not you're going to die in 2 years. but you're going to live with this for the next 10.
So that would be, first of all, with a stroke, it'd be a critical illness benefit, right? Or possibly. Now, if
Okay.
it leads to, on the ADLs that we talked about, those six
Yeah.
things, the doctor just has to, where you can't do two of those. That's it.
Okay.
So
Wow.
if you get diagnosed with an illness where I can't do two of those six things, boom, what does that mean? This $500,000, now I also can accelerate a portion of that. What can I use with it? What's paid to you?
Yeah.
It's not paid to a facility. It's not paid to someone coming to your house. It's paid to you to utilize in the way you want it to be used.
Yeah.
Easiest example to think of. I mean, because we hear about something like Alzheimer's or dementia. There's a bunch of other illnesses, but
Yeah.
if you have someone like that that gets to that situation in your family, they could still be living at home with you. They
Yeah.
just, they need help with two of those six things. That's a chronic illness, right? And so
That's
you can
right.
accelerate some of that death benefit. So basically, look at it this way: there's a pot of money when you buy one of these policies now.
Hmm.
That pot of money is guaranteed to go to somebody now. Whether
Hmm.
you die, it goes to somebody, or if you're alive, now have an extra resource to tap into that you didn't have before to help you with some of these other critical chronic illness situations.
Right.
So you can literally leverage life insurance not just for the death benefit, but as protection and insurance against helping with some of these illnesses that may arise in your life. If they never happen, guess what? My wife, kids, grandkids are going to be blessed and taken care of through this life insurance policy. But if they do happen, I've got some help. I've got a pot of
Right.
money, so to say, that I can dig into versus having to touch all my money in my retirement account or bank or whatever and drain that down. I can utilize
Yeah.
this first.
Exactly. And let's talk a little bit about the difference between what you just said, which I think is really, really important, is you've got a pot of money, you have access to it, or if you don't ever need it, it's going to be there for your heirs when you pass. Versus some people, I've heard people taking out an actual policy to pay for long-term care, but if they don't ever use it, they've just spent all that money.
Absolutely. Yeah. So your traditional long-term care is, in the most general sense, is I'm buying it to help me with, I go to the nursing home or assisted living facilities. They've changed a little bit, but let's face it, most places don't even offer them now. Very
Mm.
hard to, there's only a couple places that do anymore. Very expensive. Why are they very expensive? Because they can see how much this stuff costs,
Yeah.
so but if you don't use it, a lot of times you lose all of it or lose a big chunk of it. There's not a lot of return of premium options or anything like that on there. No death benefit. So it very costly. This is just, once again, I'm look at it this way. I'm buying a pot of money. I'm
Yeah.
paying a small monthly amount for this giant pot of money.
Hmm.
Um, this money will pay out if I pay this, either when I die or if I need it for one of those triggering situations. So
Wow.
look as it just adding another asset that is used for a bad time in your life,
Yeah.
but it's there to protect you. That's why it's insurance. And this isn't even talking about the cash value part of it, Mike, that we talked about last week or
Right.
nothing. This is just the insurance protection of what these policies can do now.
Right. And we talk really what we're talking about at the end of the day, Johnny, is peace of mind and security, knowing that you have done what you need to do to protect your family, not only in your death, but in your life. While you're living, if you have a terminal illness or a chronic illness, you've got protection there. You've got money coming in to help pay for some things. That adds so much peace to go, okay, I don't have to worry. And I think that's really what dare I say, sucks life out of retirement is the worry, and you help people fix that, right?
Yeah, the peace of mind is people don't mind, or we shouldn't mind. What's the most valuable things we pay for? Things that are guaranteed and give us peace,
Yeah.
right? People just generally don't just like to buy things. Well, I'm going to buy this car. I hope it works. We go
Right.
to buy a new car because why? It's under warranty for a few years. I'm
Absolutely.
guaranteed this thing's going to be good for 3 years, 5 years, or whatever.
Yeah.
If you went to a car dealership and they told you, yeah, give us your $50,000, good luck. If there's something wrong, bring it over here. We'll let you know how much it costs to fix it. You'd be like, are you guys nuts?
That's
No,
right.
because we pay money when we buy new things for that peace of mind, or we lease cars every two. Some people love to lease cars. Why? It's because they like to know if anything ever happens,
It's taken care of.
I'm okay. And that's
Yeah.
fine. So it's the same way with our finances in some aspects. You can pay a premium for peace of mind and guarantees.
Yeah.
You know what I'm saying?
Yeah.
And you could increase the value of your financial life in the event of a bad situation
And you
by
can
utilizing
show,
those.
yeah, and when you run the numbers, when you look at the numbers, you actually, all that money you put into these policies, you or your heirs get back. It's crazy when you look at it, when you talk to somebody like Johnny, who can just educate you on how this works, because we haven't even talked about how insurance can get you away from the market fluctuations and compound interest and all the other benefits that a good, a well-structured policy, the benefits. You buy one policy and you can have 6 or 7 benefits when it's done properly to provide peace of mind, security, a great retirement plan that's not just insurance, right? But it's a part of a well-structured retirement plan, so you can retire at new heights because you've got peace of mind. You've taken care of your family, and you know that everything's going to be fine in life and in death. And it's just really cool. I love this, Johnny. We're gonna come back again because I've got a couple more questions and thoughts and ways to use insurance that we haven't even touched on yet that I want people to understand, so that when they come and talk to you, they're open to the idea of, all right, let's talk about this insurance thing. It's kind of here's I want to talk about this next time, right? My my dad or my grandpa always told me never buy life insurance. I want to talk about that question, and
Oh
then
yeah.
we'll go deep into that and just understand why you might want to reconsider. So, Johnny,
Absolutely. Let's
thanks.
do it, man. We'll be back.
All right. Look forward to talking with you then, buddy. Take care.
Thanks.